welcome back to the Don and Gino Real Estate and Finance Show right here in your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness.
Well, thank you for joining us for the Don and Gino Show, where we always try to guide you to personal and financial wellness for 8.5 years now. And you can find out more at donandgino.com. In fact, you can go to our YouTube channel, and you will see over 2,000 videos with great interviews, daily updates from the National Real Estate Cafe, what's really happening in the real estate and financial markets, and so much more. And we do that by bringing great guests like we have here today. And one of our favorites, probably been on the show 24 times. He actually is our personal insurance guru and friend. On top of that, Scott Zimmerman with Corporate Strategies is here with us today. How excited are you about this? Because he always brings it to the table every time.
Well, it's great, Don, because the reality of the matter is we always say we bring you our life team. And every time that we're kind of, I'm going to say I'm a little selfish, because every time one of our guests comes on, I learn something. And today's no different. We're already talking about things that either we've already done because of Scott's guidance, or things that maybe you should think about doing, at least to evaluate your situation. I think that's kind of where we should open things up today, Scott, is reevaluate your situation. I think a lot of times we believe that, and I know life insurance is not all you do, but life insurance is one aspect of what you do. And I think it's almost like we're like, oh, I finally got life insurance. I really didn't want to. I finally did it. Thank God that's over. I'll never look at it again. Well, that could be a mistake, right?
Yes.
Well, because you think you already have it handled. You're like, I took care of it, yay! And you feel good about it, because it's really not about you. If you don't do it, then you're selfish, because you're not taking care of your family, your loved ones, and so forth. So why not do it? But we find out from Scott, and we looked at our own policies and went, oh shoot, we should rethink this or relook at it. So Scott's going to talk about, basically you refinancing your life insurance policy. I love that. I never thought of it that way, Scott.
Yeah. I mean, like you said, a lot of people, they buy a policy, they put it in their drawer, and they forget about it. And there's so many different types of life insurance. There's term life insurance, and there's a whole bunch of different types of permanent life insurance. Term life insurance, as you know, is you're buying it for a certain term period. And when people buy that, they're buying a 10-year level term, a 15, 20, or 30-year level term. They forget about it, and when the 20 years is coming up, they say, oh my gosh, I got to get a new policy. But if they're unhealthy, or they can't afford what they had before, and sometimes it makes sense to refinance the life insurance, look at it many years before it's coming due, to lock in new rates and lock in an extended period.
You mentioned already that there's a lot of people right now. You see it more than ever. You got an aging population. Bottom line, we talk about this all the time. We see it, and a lot of people, like you said, get to that stage and go, oh wow, I'm outliving it, or I want to extend it. But it could be too expensive at that stage. It's got to be a lot more expensive. It's a
lot more expensive.
So let's talk about opportunities. I mean, it could even get difficult to refinance it down the road. So as you mentioned this idea, I started thinking about, we now know that when you do your trust, as from sitting with Lisa Odom on many shows, you should evaluate your trust every year. So every single year you should reevaluate your trust, because sometimes people that you've appointed to do things are gone.
I had to redo mine completely.
Yeah. You've lost them. You've gone through a divorce. Many things may have changed that may have an impact on your trust. You're not friends with the people you put in there to take care of your kids anymore, etc.
Oh yeah, I got to change it, Gino. You're out.
Get me out.
Because the problem is, he's also in a life insurance policy, and executive. I'm like, he's going to pull the plug.
Wait, yeah, medical and life insurance. Bad combo. Bad combo.
I think I'm toast. Nice knowing you.
But that's a good point. So make sure you evaluate your trust annually. We also found out that you probably need to evaluate your P&C insurance annually, just because things change, laws change, riders change, the policies, that big book that you get in the mail that you just pick it up and you throw it, you never read it. That usually means you got less. Every year it means you got less, you got less, you got less, and you don't know what you got less because you don't read it. So work with an insurance agent, make sure that you check it every year.
Well, the key thing on that, just as a piece of that, why we're like, okay, why did I get less? And maybe your policy amount didn't change. Remember, they're making sure you don't decide to go look for somebody else to do the insurance. So what they'll do is you may get less. That's why your insurance didn't change, and that rider might be super important when you need it.
It's called sneaky inflation.
There
right?
you go, exactly.
It happens in food. It happens in all kinds of things. It happens to your insurance
Because
policies.
they're not going to tell you
as well.
got less. They're going to say, hey, good for you, your policy amount didn't change much.
Yeah, but you're no longer covered for guns or jewelry or et cetera, et cetera. So, so tell us, is annual too much for life insurance? How often should we look at life insurance?
Well, when it comes to term life insurance, annual, that's not going to change. It's a contract, right? You're committing to 20 years. The insurance company is saying we're not going to raise your rates for 20 years. But what's really important is a lot of people buy permanent life insurance, not term. So they buy a policy to last their whole life, right? Whenever that's going to be. And a lot of people buy policies or bought a policy. An agent brought them an illustration and said, look, if you pay this premium at age, it's going to go to 100, 120, 90, whatever you bought it for. But the insurance companies over the past 10 plus years have changed the interest rates that they're crediting, raised mortality expenses and fees. So these policies that these people bought that think they're going to go all the way to the end, we see them expiring in the 70s and 80s, and it's really that's something you should really look at on a year to buy.
So let's clarify.
No clue what's happening.
So let's clarify why that happens. Not because all insurance companies are bad. It's because the illustration that you mentioned was maybe done, let's call it in the 80s, where an average return was 8%, 12%.
12 to 16%.
Gotcha.
These illustrations we're showing now, the insurance company is paying 4%.
Right, because that's the going market rate for return.
On an insurance policy.
Yeah, so one thing
you didn't think about that when they showed the illustration. Basically, you're like, okay, based on this,
it looks so good.
You never even thought about that. The return on the monies you're putting in, basically, are getting less, so it doesn't last as long.
Well, let's also be honest. We never thought that historically we were going to get back into a 2% 10-year note.
Right.
I mean, that was just something that wasn't supposed to happen, but it did.
Can I give you guys a quick example of one?
Yeah,
I'm working on
of
it
course.
right now. Not every case is this big, but an estate planning attorney said, oh my gosh, I'm working on this estate for this client. It was a couple, a husband and wife. The man died. They had these policies on a second to die, so policy covers both lives. But anyway, she said, we run these policies to make sure they're safe. Well, she's 64 years old, the surviving spouse is 64. One policy, their $50 million worth of insurance, is going to expire at 78, and the other $25 million is going to go to 80. She's 64. Now, she may pass away before then. What if she lives to be 90? People are living longer than ever before, right?
Yep.
100. So these policies
You
are
can
not
tap
going
ours
to.
out at 65.
Yeah, I mean, by the way, she could make these policies, which I'm going to show her. We could make it last to 100, but her premium is going to go over double what she's paying now. She's paying $400,000 a year right now.
Oh, wow.
So it's going to go to 900 something just to carry to 100.
Wow.
So
And it might be a waste of money because she might not make it to 100, but if she waits any longer, she won't have that option.
And each year you wait, it's going to go up that much more.
Right.
Right.
So
just
and obviously
something
that's an extreme example.
That's a total, but we see it all the time on small policies, on $100,000.
Well, it's all relative.
It's all relative. It's all the same.
Well, mine.
Yeah.
If your policy doubles, mine double, I'd be like, oh.
Yeah, exactly. It doesn't matter. Yeah, that's an
Right.
extreme case, but
Yeah.
we see it happening all the time.
The other thing, too, to think about with term, and I think about it all the time, and some of you may have mortgage protection insurance, which is term life insurance is all it is. No one's looking out for you on that, like you bought it from Wells Fargo or somebody that offered it to you in the mail, AAA or whoever. For years, I remember my whole life growing up, my mom had that, right? So when my mom passes, first thing I did, I was like, oh, I bet you my mom had that mortgage insurance policy and my dad's going to be stoked they're going to have no mortgage. It's going to be great. No, guess what? They got a loan modification. Well, when they got their loan modification, guess what went away? That insurance policy. So you may think you have something you don't. So that's another thing to be careful with in the insurance world as well.
It's true. Yeah, you called me on that.
Yeah,
I remember
I did.
it was happening, and there is, and I don't have it memorized, but I'll get it to you if you want. You can add
It's
it to
like
the
a
site.
registry.
Yeah, there's a registry, so a lot of people don't know what they have, or their parents passed away. You can go on and see if there's any existing life insurance policies that were around for.
Yeah, and maybe it's one of those things where you check it every few years, like the state thing, where there's something that falls in there that you don't know, or it took a year before somebody figured out. You go to the state thing and you get AT&T owes you 42 cents for something.
That's true. Yeah, it's funny.
So, real quick, I do want to touch on we could do this in another segment if you'd like. Okay, that's fine. I was going to say I do have a question: is why you would refinance your term insurance? Because both of us
go
did.
ahead on that. We'll stick with that because our next segment we'll talk about long-term care and that you can basically get insurance easier than ever now.
Cool.
Yes.
So
why would you do that?
why would we do that? And you could use us as an example,
yeah,
right? I mean, I was a great example of why we would do it.
First off, sometimes rates over the years, sometimes they've dropped, so you may be able to lock in more years for the same premium. So just
You did that for me.
right. We did that. We
Actually
did that.
lowered my premium and extended the length because it was better policy than what I had
I
before.
mean, yeah, and just to throw in so you can do that. You can add on extra years, and as an example, a 50. We just did a 50-year-old, $4 million, and not every policy is huge, but $50 million in a $4 million on a 50-year-old was $6,500 a year. If you waited till he was 61, it went up to $7,100 a year. The same thing, but the older we get, the more expensive it gets. So, if you want to wait to refinance, you could lower your premiums. You know what I mean? Does that make sense?
Yeah, totally makes sense.
Well, in my case, it was different. I was such a different individual.
You were two Ginos.
Yeah.
Right.
So I think when I originally applied for the first time, way back before we ever met, I'm pretty sure I was like 290 pounds or 285 pounds. And when we did ours, I was probably like 220 pounds or 215 pounds or something like that.
Yeah.
So just that alone was a massive change.
Yeah.
And I was already, like you said, like 7 years into a 20-year policy or 8 years into a 20-year policy. So we got a new 20-year policy at a lower rate than what I had before because my life circumstances have changed. So again, if you've gotten healthier, probably a great reason to take a look at it.
All right, we got another great segment with Scott Zimmerman, our personal insurance professional with corporate strategy. Scott, how can they get a hold of you before next segment? People are probably going, I should, look into options because, like I said, I had my insurance with somebody else. I gave it to you, and you're like, just so you know, we can refinance
Make
this,
it better.
basically make it better.
Yeah.
And it was great.
You can call me anytime at 818-377-7260. I'm extension 111. Or you can email me at scott@corpstrat.com.
corpstrat.com. We use it all the time.
Yeah. All right. Well, join us for our next segment. We'll talk a little bit about long-term care because that's another supplement that we should talk about. Not a lot of people have.
They should. So stay tuned, as you should, on the Don and Gino Show. You can check us out again at donandgino.com. We'll be right back.